Greetings, Jedi traders. David here at TradingFibs.com to bring you the technical momentum outlook for week 5, 2017, as we roll into February this week, end of January. Always please seek financial advisement, as always, when trading with your money, as these videos are for educational purposes only. Support your knowledge of the market, see what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, Jedi traders, it's been a couple days since week 4 has ended. It is Sunday. Market about to open here. Was considering doing the outlook there on Friday, but watching the weekend events sure has taken on a different picture. So we're going to stick to the technical charts as we see where we are. But again, the catalyst this week, we have FANG stocks reporting this week, Amazon, we have Facebook and Apple, which can move that NASDAQ in either direction, but with ripples through Washington, can move this market at any given moment. So heads up, I'm ready for a volatile week here. Hey guys, as usual, we'll go over again. Make sure you check out the week recap and trading session recaps, but we'll go over that at the end. Let's get right into the charts and see where we are currently. Oh, it's already got the banners out. Dow 30K, Dow 30K. That didn't take long. But the truth be told, guys, we got to retest. We have to close gaps out. Now, I'm not saying it's going to happen now, but I'm telling you 15, well, not all the way down to 15, but I got a gap down there at 15,924. So just under 16,000. That's not so bad. 4,000 point drop. If we want to get up higher, that's what, in my opinion, and I don't say it with opinion, I say with 100% guarantee, we will eventually close those out. I don't know if that's happening now. I don't know if it's happening next year. It could happen next week. It could happen on Wednesday. But for the most part, the nearest open gap, pay attention, 19,882. So keep that in mind. We run that 20K bell this week. What a week to finish it off. So markets continue to run up. A little consolidation up here. So keep that in mind. Open gaps down below, 5104 on the NQ here, and ES downside, 2280.50 is the nearest. Yes, we have open gaps. We go over those each day. We got a ways to go on that ES, all the way down to 1860.75. So stay tuned as the market rolls through 2017. Crude, open gap upside at 55.41. Nearest one downside, 46.51. We'll see how any politics roll into crude, and that always throw in a little bit of OPEC, and you got yourself a volatile market. All right, we're going to stick to the big picture today. We're looking at the daily picks. We're looking at the weekly on the indices. We'll look at where we are in the 4-hour charts, but overall, we'll stick to the indices and the key futures markets that we watch each day. See where we are, current technical momentum. Obviously, every week, every day, you should be ready for price action to lead in either direction. All right, let's jump into the daily pick. There we are. All right, let's start with the NQ here. We have the daily, we have the weekly on the left. We have the daily and the 4-hour. So where are we currently? We are on a weekly. We are at the overbought, 51.56. Again, these are the MML. Maybe you're using Fibonacci. That's fine. Nothing wrong with that. Maybe you're using another bigger picture, pivot lines, resistance levels. This is one that I'm tending to find some comfort with, where price action tends to possibly hold up. It's not possibly, but tends to at least stall. It doesn't mean that this is a hard line and this is all overbought and we're coming down. This just means technical momentum where we're sitting after a bounce off major support resistance. What we look for is we look for price action to run up from the lows to the first level here, major support resistance, and then follow through all the way up to the upper levels up here from resistance 5K all the way up to 52.34. So we are halfway between top resistance. So now we know we are on a weekly in an overbought area, meaning we have run up to a point where stocks or the indices here have run up quite some distance. And so what we do is we go to the daily chart and see if there's a match. And what we see is we say, hey, there it is. We're sitting above the 50. We're sitting above the 200. Any pullback we start to look at the smaller time frames, down to an hourly, down to a 15-minute, and that's what we do each day, as these charts can significantly change in a day, and these levels can change, including HA bars, Heikin Ashi bars, and trend. So right now, big picture, NQ, overbought on the weekly, or at the highs, let's call it, so we still have room to come up here to 52.34. And as well, on a 4-hour chart, we've come up to this 51.56, which is not the same levels. So where and what can I expect? Well, if price action in any way is going to resist up here in this area from 51.56 to 51.95, which again would put us in this range of the both daily and weekly, I could see us eventually running up to at least all the way up here. 52.73 would be the highest number I'd be looking at. Now, you have to remember, a 4-hour chart will change weekly. So that's something I will watch on an intraday basis. But as far as now the big picture, any pullback at this point would come back down to 5,000. All right, 5,000 would be the first pullback I would be looking to downside. Upside, again, I'm looking up to 51.95 and then looking up to 52.34 on the bigger picture. If we break that 5K, we'll then start to look to the 50 MA, 50 period moving average, and then eventually all the way downside to about 48.43. Again, all we need is a small catalyst in this country to make that happen. Well, I apologize, in this market at this point, to make this market come downside. All right, so that's where our NQ is. Again, we want to watch that intraday. Let's go ahead. I'll jump over here to the range charts that I look at each day. Here's the NQ on a range chart. Price action again up at that 51.56, matching that 4-hour chart. So anything upside, 51.95, and then all the way down to 5K. Now, one concern, something I've been looking at lately, is the ADX. Again, another market internal that can be used on any chart. And the fact that the ADX on my time frame is sitting up here at the upper levels has me a little concerned, but that, again, is not a matter of this is it, this is the end-all, market's coming down, I'm a perma bear, and we just have to, hey, at some point the market does have to come down, but with earnings coming out this week, I don't want to mess around with that. I want to wait and see what those earnings are showing and then see what the market decides to do. So, just a caution, we definitely are at a level of resistance up here to see where and how, what comes next. All right, let's jump into let's go to the YM. Take a look at the YM. Again, we're up here at 20K on the weekly. Do we have more room to go upside? Sure we do. We want to watch 2313, 625, 938, another about 1,000 points up. Sure, we got some levels to look at. But let's take a look at the daily, see how we're doing. Do we have a match? Yep, pretty much the same numbers, both across the board, daily and weekly. But on the 4-hour chart, yeah, we got a little bit of chop here this week as the YM pretty much held on the 4-hour charts at these upper levels. So I got to say 2,078 pretty much holding the line. Yes, we can go back and retest that. We could also retest 20K here. We break 20K. I look down to 1980.44. Now, what is right below that? That's right, the 50 MA right over here. So I'll look for support on that. We break that 50 MA. We'll be looking down to 18,750. Well, before we get to 18,750, do we have anything in the way? Not really. We'll be looking and then eventually down to 19,688. So again, these are levels that you want to watch, but currently still in a momentum to the upside. Let me make that clear. We are currently still remaining at this point to lead us higher, but again, with caution at this point. All right, let's take a look at the big charts on the range on the YM. Let's go to the core chart setup. Again, no ADX on there, just to show you that we're sitting in this range-bound session that we have been for a while. Sitting above the 51.44 gives me the upper trend, and there it was. Nice move to the upside, but again, a lot of resistance here. Got to break above this 21.17 to get up to the highs, 23.13. Again, we'll monitor that intraday. All right, daily big pick. Let's jump over to the weekly, daily, and the 4-hour chart. Again, we can see the ES holding up here around 2281, broke upside, 2281. So anything downside, I'll be looking to 2250, including the 50 MA support. All right, anything that breaks 2250, I'll then be looking downside here to 2281.25. That's major support resistance on a 4-hour chart. Again, I'll match that up to a 15 and a 60-minute chart this week, and all the way down to eventually 2265, which will be way ahead of our 200-period moving average. Anything lower than that, we'll start to look to the daily major support down to 2125 and all the way down here, as well as down back to 2000. Again, we'll monitor the shorter time frames for anything upside, but again, I'll be looking at this point if we get a bounce off 2281, or if we continue here higher, 2296 up to 2300. All right, taking a look at the range charts and the ADX on the ES. There's our ADX ES. Again, we saw that pullback there on Friday off the overbought, 2296 upper levels here. And we hold at the top resistance, 2289. Match that up on the 4-hour chart. There's our 2281.25. So we could still hold at these highs based on the ADX, but definitely a pullback here. If we continue to come downside, we get a cross on directional movement index, and we get the red line upside with ADX up in the territory above 20 to 40, we will definitely see the markets pull back, and we'll be watching 2250 downside. All right, let's just take a quick glance at the crude gold, the 6E and the 6J. Taking a look at the bigger pictures, taking a look at the weekly. Again, we saw that open gap on the crude upside. It's going to take a big push to get up there. We're pretty much holding here at 53.13. We could run this up to 62.50. That would be a heck of a push. But before we get there, I'm going to look at the daily. The daily up here at 56.25. That's the highest probability at this point. Off the levels of support down here, that's the trend here, sitting above the 50 support, above 200, and holding above major support resistance 50 for some time now, since at least December on the crude. All right, so hopefully we'll get that 56.25 and close out that gap. That'd be a nice move. All right, taking a look at the gold on a weekly and daily. Here we are. Gold has been running downside off the resistance. Little pause here at major support. Bounces off 712.50, and we just got down 11.25. So that's something to watch. Price action by the MML charts would say that we're headed back upside here to 12.50. And then, excuse me, on the daily chart, again, we're bouncing off that 1187.50, so we just could possibly get back up to that 12.50. However, a little concern as we sit here between the 50 and the 200. All right, taking a look at the 6E. Taking a look at actually the 6J first here. Taking a look at the 6J yen. This price action has pulled back off the highs after a little bit of chop up here, down through the resistance. A little bit below major support, finding resistance here, 87.50. I would look for the yen to pull down to 81.25. Again, a little bit of support, so we might see a bounce back up to 93.75 or a reset intraday. We'll also watch and monitor the intraday setups. But right now, currently, the 6J in a confirmed downtrend with 81.25 downside, watching 93.75 to the upside. All right, last chart to look at here. Let's get the weekly on the 6E and the daily. There's our euro. Again, euro chopping down at the lows here. $1.06, $1.07 as we hold down in the support levels. We'll be looking at $1.12 up here, which would first hit a resistance of $1.09 up here off the 200-period moving average. Again, the move, that's right, the move coming off the lows. Stall here. If we go higher, $1.09 upstairs. Again, we'd be watching on the daily, on the weekly as well for $1.12. That'd be higher. But again, if we get back up here to $1.09, I would have concern over resistance up here that we come back down. Anything back downside, we'll be retesting the lows down here at around $1.04. All right, again, folks, Jedi traders, please watch those VIX numbers. We have strike calls in February for numbers ranging in the high teens to 21, 22, 23 with a lot of volume up there. So probability at this point is the market will pull back some, but I have to go with the technical momentum probability at this point. That still remains to lead us higher with caution. In my humble opinion, if all things remain constant, but nothing remains constant in the market, so you have to be ready for a shake in either direction. So I state with caution, as seen in the charts, both in the video here and in the weekly blog, that we are at a technical momentum decision time. simply based on my strategy that puts price action in a stall at the highs. All right, let's take a look at where we are for the economic calendar rolling into the last week. So heads up, guys, we're at the last week of the month. Fund managers doing what they do to their portfolios. We have FOMC announcement on Wednesday here. We have non-farm payrolls on Friday. We have earnings coming out this week on the FANG stocks, plus some. But again, mix that in with the VIX, and we got ourselves a volatile week. So no harm in holding here as we slide sideways, and rest assured, I will be ready to alert the followers of mine and on Twitter this week to any change in trend or simply continued movement upside. All right, as I said at the beginning, and to recap here, a week's worth of posts. We start with the technical momentum, as you see here. Oh, let's get that. There we are. Technical momentum outlook. And then through the week, we post I post a pre-market trend in the morning, giving my outlook on the NQ and the ES, and then in the afternoon session, recapping some of the significant moves through the daily trend video. So that's where we are at, and that concludes an insight into this week's technical momentum outlook for the indices and key future markets. Hey guys, feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. That mantra: one simple strategy, any market, any time frame will, any market, any chart, any time frame will keep you disciplined. Hey, what does that look like? It looks like that right there. Whether you're looking at the bigger time frame, whether you're looking at the shorter time frame, we're looking for price action to be either above or below that 5144 cloud. You're more than welcome to throw up an MML chart any given day and to watch price action hit those levels or pass through them, and again, manage it on the way down or the way up. You can find me every day on Twitter at Trading Fibs, and as always, I leave those crystal ball to the experts. I really have no clue where we're going this week. I'll have to leave it to the bigger crumbs, but I only watch what's in front of me and on my charts, make my decision from there, and as always, I leave my bias at the door when trading. Anybody who's interested in joining us in our community of like-minded traders seeking those highest probability setups, feel free to email me, David at tradingfibs.com, and you may join us on Thursdays or Fridays to view the live trading charts or live charts as they happen in the trading day. All right, guys, let's get ready for week 5 as the market set, or actually has just opened up here about 2 minutes ago. Have yourselves a blue zone week wherever you may be. Good day, good night, and good trading to you.